Good morning to WG Hub Live, this lovely Friday morning. This week we're delighted to welcome new presenters and panelists on the subject of research and development claims and tax credits for SMEs. This morning we've got Andy Kimber from Lydbury Consulting. Welcome to the show, Andy.
Thank you very much. Good morning.
Good to see you. And joining us today from our friends at Charter Tax, we've got corporate tax specialist Charlie Goss. Good morning, Charlie.
Hi, Ian. Hello, everyone.
So, welcome to you guys. We've also got our senior client service manager, Jono, on. You might have met before. Good morning, Jono.
Morning, guys. Hello. All right.
So, Jono is one of our obviously key client service managers in the field of technology and tech startups. Is that right, Jono? You do quite a few of those.
Yeah, that's right. Deal with many of our SMEs in sort of the engineering and manufacturing industries, of which they have various dealings with R&D throughout their ongoing trading life, I suppose.
Yeah, fantastic. And it's good to see you've got the wintry theme going on there behind you. Nice rocking fun.
Getting the Christmas spirit, and yeah.
And Phil's joined us as well. So Phil's from Lydbury as well. Good morning, Phil.
Hello. Everybody well?
Yes, thank you. And you?
Yeah, great, thanks.
Excellent. So we're live this morning, and we're going to start our presentation shortly. Normal rules apply. Obviously, please use the Q&A for the sensible questions, and the chat box for the heckling or whatever else you want to message us. We'll be listening to Andy and Phil first, and then second half we'll be discussing your questions, addressing some of the FAQs that crop up when we talk to clients about R&D. So without further ado, so Andy, if you can outline your presentation and let's get started.
Lovely. Thank you very much, Ian. Okay, let's get this going. Okay, so good morning, Ian. Thank you very much for the introduction. My name is Andy Kimber. I work for a company called Lydbury R&D along with Phil. We are a specialist R&D tax consultancy. We help clients claim back money through the scheme or schemes that I'll come on to. We've been operating for a number of years now. It's a great industry to be in, actually. It's an industry where you get to help people. Not very often you can say you help clients claim back money from the government and they're happy to give it, but that's the scheme. So we'll go over it in a little bit more detail now. As you can see there, there's a number of slides I've got here. The presentation this morning is predominantly about the eligibility, because I think that's what people often want to know about, but I will just give it a little bit of background at the start. I've got a number of examples here, which I think hopefully will demonstrate the eligibility and how firms can do that. So, as I say, a number of slides here through. Predominantly, I'm not going to go into the detail of the scheme. I think lots of folk have heard of the scheme. They've been involved in potentially. So there's a lot of knowledge around. So, as I say, I'll be majoring this morning on what makes claims, what make clients eligible. Clearly, I'll whip down at the end there, and I've got some bits and pieces just very quickly then to show about the claim process very quickly there, and also talk about coronavirus and how it may affect the scheme as it is. So without further ado then, let's go down here. He says, okay, let's try again. There we go. Okay, what are R&D tax credits? I guess that's the question, isn't it? Well, basically what they are a return of money from the government for innovation type work that firms have done. So it's the investment that firms are putting into doing something new, something novel, something tricky. There's a lot of rules to it. So I'm going to try and simplify it here. If you are ever struggling to go to sleep at night, the online HMRC manual, the CURD, that's a natty title, Corporate Intangible Research Development Manual, runs about 180 pages. So there are a lot of rules to it. But it's a very generous scheme, and I think you can cut through a lot of that. It's relatively simple in its basic premise. Again, folk will have heard lots and lots of detail about how much money they can get back. it's around up to a third of the eligible activity. Typically, we see around 25%. It can be less, it can be higher than 25%. It just depends on what you're doing, how your firm is structured. So around that kind of element. So I've titled it the R&D tax credits. People will have also heard of it as R&D tax relief. It's effectively the same scheme. In fact, there are two schemes. I'll come on to that. But in terms of credit, that's a cash payment that comes back in through your corporation tax side. But there's also tax relief, which is a reduction in the tax owed, or it can actually be a combination of the two. So one particular claim isn't just a tax credit or a tax relief. It depends on how it's best structured, and your accountants generally the folk who will be best placed to advise you on that and to give you the advice on how the best to bring that into business benefit. The other great thing about this scheme right at the start is that you can claim back 2 retrospective financial years for your company. So it is not uncommon for clients to see the ability to claim twice in 1 calendar year. So the first one is normally the biggest one. Clearly, it goes back 2 years. It's a double bubble, if you like. I say that I think is perhaps part of the generosity of the scheme, in so much as you can go back and you can claim back for work you've been doing, a few years back. So the scheme background then, it was introduced about 20 years ago now. It's simply, as I say, introduced for innovation. So I have some anecdotal evidence to suggest that we actually pinched our scheme from the Canadians, actually. But there are similar schemes running in most of the mainland European countries, certainly North America. They all run this kind of scheme because what they're trying to do, they're trying to get firms to innovate, to do something new, something different. Because fundamentally, if firms don't change, if they do the same thing year out, sooner or later, someone will do it faster, cheaper, better than you. And if they do that, they're getting an advantage. And sooner or later, obviously, ultimately, you either won't make any money or go out of business. So innovation is key to driving business benefit, and certainly in the UK and lots of the countries. So it's obviously operated from the government for HMRC, and they do that because any money that you get back comes back in through via the corporation tax system. So that's why it's done that way. There are actually 2 schemes here running at the moment. There's the SME, the small and medium-sized enterprise scheme, and I'll define that in a moment. But there's also the RDEC, the Research and Development Expenditure Credit. That particular scheme is the successor to the large company scheme, and that's for the larger companies. So in terms of an SME for this scheme, it's slightly different. Typically, you often hear people talk about an SME being a company with less than 250 employees, but for the purposes of these schemes, it's 500 employees. So there are larger sort of SME definition here. There are also, for this particular SME definition, a turnover and a balance sheet consideration as well, but it's almost always the employees which define whether it's SME or RDEC. It has been enormously successful from the moment it was introduced. The claim numbers have gone up and up and up. Haven't seen the claim numbers for this year yet, but 17-18 they had nearly 50,000 claims, which resulted in £4.3 billion of tax credits, which is a huge sum of money. Now, I must just qualify that by saying that also includes the RDEC numbers, so that's why it's very, very large. But when you think the majority of folk who claim an SME basis get somewhere between £30,000 to £60,000 for their first claim, it is a truly successful claim, a truly successful system. And it's a win-win thing as well, because, as I say, the individual company gets back money. It comes in effectively tax paid, so that's great. That's bottom line profit, if you like. And the government get further innovation, and then schemes get bigger. They employ more people, they pay more tax, so it's a win-win. And for every pound that they give out, the inbound revenue give out, typically they ultimately end up seeing £2.40 invested in further innovation in R&D. There is no requirement to reinvest the money in any particular thing. There's no stipulation as part of the scheme. Companies can use it for whatever they wish, but typically we see them immediately ploughing that back into the company, which is obviously the intention from the government. But having said that, even though you've got these large numbers of claims, huge sums of money, there are an enormous amount of companies who are missing out. So if you consider there are around 4 million SMEs in this country, and of those, estimates are somewhere between 5 to 10% would be eligible for a tax credit claim. you can see if you're only getting 50, it'll probably be 60,000 this year of claims, 60, whatever, around that. So you can see there are enormous amounts of companies who are missing out here, you know, in the hundreds of thousands almost. And their competitors are getting it, and yet they're not claiming. So why is that? Well, here's some of the reasons I see. I think the first misconception is so many companies think we don't do research and development. We've got nobody with a white coat and a cone head staring at an oscilloscope all day long. We don't have that. That isn't the case. It's a very generous scheme for lots of reasons. You don't need to be doing that. Another one I hear regularly, we're just a small firm. Well, yeah, that may be the case, but you may still it doesn't mean you're any less eligible. It just means that actually the chances are any eligible work will be less than a larger firm, or you may be a small firm that's subcontracted work out, which I'll come on to. So that's just as eligible. Another one I've heard is we're loss making. Well, that doesn't mean that you can't claim. You can claim, absolutely. And this one, I can see why people would think this, but again, not true. Failed projects don't qualify. Well, the regulations explicitly state that failed projects do qualify. So you don't have to have been successful in what you've done. It can actually be failed. But if you've learned something, if you've done something tricky and you've learned something, then that is eligible as well. And I guess the final one is a number of people I've spoken to said it'll just take too much time. Well, it does take time. There's no doubt about it. There are regulations. It does need to be done properly, but that's why I would suggest it's worth talking to your accountants, having a professional R&D tax credit specialist help you, who will do the vast majority of the heavy lifting for you. Eligibility then. What makes you eligible? It's solving scientific technical problems. That's the nub of this. So it doesn't mean to say you have to have produced something world-breaking and no one else in the entire world has got it, because if that were the case, then very few companies will be able to claim. If you've developed something new, or you've done something, improved something that already exists, then you are potentially eligible, and you should think about talking to someone about looking into a claim. You also need to have taken the financial risk. I won't major on that now, but as long as you have taken the financial risk on what you've done, then that's the other major stipulation. But to simplify it then, technically tricky. So have you done something technically tricky and you've improved, or you've created something new? And if so, if you can answer yes to that, then there's a reasonable chance that you're eligible. And as I say, you can go back a number of years and think, right, what have we done? Okay, all right, okay, well, we might be eligible. I would strongly suggest talk to someone, ask someone the question, ask an expert, get some help, because you may well be eligible. In terms of that eligibility, then there are probably 4 key areas that we would normally look at. And that's where we generally see the R&D: product, process, material, or service. So any of those areas are the areas where R&D is rich, really, in terms of finding it. And I put 2 small examples here. So it can be as little as amending a hand tool. You've improved something. You've got a hand tool in your business that doesn't work. You can't buy one online. No one else seems to know where there is one or how it works, and you develop that. That, in a tiny sense, is R&D. It is R&D, or potentially is R&D. Obviously, not very much. Or you could have gone to the effort of producing something that's groundbreaking in terms of a software solution. As I say, as I've written there, you see, it doesn't have to be you. It could be you've done a third party. So an example here, I worked with a ski company. And, well, how on earth can they be doing R&D? Well, they were actually. They were doing R&D. They had got a developer in India who was developing something with some really special software that allowed them to real-time link their chalets and the rest of their business to their UK work. So, you know, they had a sizable claim, actually. You wouldn't, on the face of it, thought they could be eligible, but they were. Just reinforce that. You don't need to be doing something, developing a vaccine for the world. There are lots and lots and lots and lots of companies who are eligible. Just have a look at what you're doing. Think about, you know, where you've gone, and have a chat with somebody. A couple of minor things here. So the softer sciences, humanities, arts are explicitly excluded. But having said that, if they were doing something that produced a fantastic new software solution for something, they may be eligible, but the day-to-day work for their softer sciences is not. And there are other stipulations, but for example, you need to be a limited company. You can't be a sole trader, for example. Right, I hope we're going to go through this in a little bit of detail, and the last 2 or 3 at the bottom, even more detail again. But I think this hopefully will demonstrate to people the kind of industries and the kind of businesses who have been hugely successful. So an e-commerce retailer, how could they possibly be eligible? Well, they were, and they have got an ongoing claim because they have been developing and are still developing some very clever IT solutions to their logistics activity. So they're absolutely allowed to claim. I love the second one, the bakers. The food and drinks industry do a lot of claims for this particular scheme. That's not one of my clients, that's one of Phil's, but they're developing these new products, and they're working with the ingredients, and they're updating everything all the time. And they've done some successful claims as well. Marketing company, well, again, you wouldn't on the face of it thinking, oh, a marketing company could be eligible, but they're developing lots of new, clever, tricky activity. And they've had ongoing claims, successful claims, which is wonderful. The music video app developer, well, again, you might think whether it's an app developer that, they might well fall it, and they have been doing a lot of R&D, huge amount of R&D, but you can see that's a very healthy claim. Window tinting solutions. Again, a relatively, what you might think is sort of run-of-the-mill industry. Well, actually, if you're doing something tricky, doing something clever, which they are, they've been perfectly eligible for a claim and have been delighted with their claim. I'll come back to the non-destructive testing. I've got a couple of slides on that. Again, I think that's a great example of how firms potentially, can be very successful in the claim industry on this side of it. But the facades one, again, lots of companies producing facades, lots of companies fitting them to buildings, but their R&D is all about, or predominantly all about, how they fix their facades onto the building. So each time they go to a new building, they've got a new design, the fixings have to be different, they have to develop them, and they've had an ongoing success with claims on this, so that's fantastic. The last one is one of my absolute favourites, water forensics. As a grand title for a company, what they do, they go around and they try and identify whether or not other companies are paying too much for their water. And the water companies are always very reluctant to try and give them the information they need because they don't like people questioning their bills. So we were called into these guys because their accountants felt that they might have a claim. We went to see them, and it turns out that the chap there, as we often see, said, no, why don't we do any R&D? We only have 2 real techniques. The first one they do is they get one of their guys to sit with a hammer by a manhole cover, and then they send another chap further down the water course. He lifts the lid, puts his ear into the hole, and then the first chap bangs it, and they see if the noise comes down. If it does, well, then they think, the water's coming this way, fantastic. We might be able to detect whether or not they're being billed inappropriately. Or they put in dye into the water and they see if it comes through, food dye, so they see if it comes through. So they're clearly not eligible for R&D. And he felt that was it. And he said, no, that's what we do. And we said, okay, well, that's great. You're quite right, none of that is eligible. But what do you do if there are problems? So what do you mean? He said, well, what do you if there are problems if those two don't work? He said, oh, well, we've got a couple of things, actually. One thing we have done is we have to put a camera down the pipes to have a look. Okay, and did you buy the camera then? No, we tried to, but there wasn't one available. So we in the end, we ended up having to get some other bits from camera builders and adapt it to put it into the system because it has to go down a very small pipe and we have to turn it. And there were lots of reasons why it was very unusual. We just couldn't buy one. So you developed it. Well, yes, and we got, we did, yeah. Okay, that's R&D. So it's a great example of a company on the face of it who would never, ever have thought they are eligible for R&D, but in actual fact, have been eligible. But let's talk then about the NDT firm, non-destructive testing. So non-destructive testing, these are the folk who go out and they do some clever work. They're trying to find anything you can't see visually, so they're hidden or microscopic. They do a lot of it on aircraft. When I was in the RF in the 1980s, we were doing non-destructive testing then. So many of these techniques haven't changed for decades. Some of them will have changed, but a lot of the basic systems are still the same, and it's also safety critical. So, changing techniques has to be very carefully regulated. So, where's the R&D in that? And as you saw back there, they've got a very successful claim ongoing. Well, it's in their procedures. So sometimes they'll go out to run-of-the-mill jobs, and that isn't eligible. But when they have to change things, when they see something that's complex or new, they very often have to change everything they're doing. and they have to revise it. And there's nothing out there they can go and copy. They have to develop it themselves. So you can see again, so far they've claimed over £140,000. So you can see how, again, on the face of it, you would think, well, that's been around for years, nothing's changed there. But they're innovating, they're changing, they're developing, they're doing tricky stuff all the time. So I think that they're a great example. I think the other thing I would just say about eligibility, actually, before I move on, is that I think sometimes it's easy to think, well, I know exactly what my R&D is. We were working recently with a Dorset-based firm who had submitted a claim. They had done it themselves. They rather felt they'd gone through it. That was actually fine. And then we were called in to help them because there was a suspicion that perhaps they hadn't actually picked up everything. We went in, spoke to them, went through the entirety of the scheme and how it works and what was eligible. And they ended up with a further £14,400, which they hadn't initially claimed. So they were again, absolutely delighted with that. So I think it's just sort of sitting back and really going through, ideally with an expert, everything you have done, and therefore trying to understand the totality of where your research and development for this scheme may lie. Claim process. The biggest part, or I guess the most difficult part for many people, is to identify, as I said there, all the eligible work. Identify, sit down. We tend to think of ourselves almost like as policemen. We come in and ask lots of questions and try and just go through. We talk to the clients. We go through again and again what they're up to, how they're doing it, and just try and help them tease out where eligible R&D work is. Costing it then is the next phase. We need to work out what elements were eligible and which aren't, and how it's costed. That's relatively straightforward for many people, I think. Claim documents need to be put together. There's a technical report that needs to go together. These are relatively complex, and certainly that's what we do. We do the vast majority of the heavy lifting to make sure that folk aren't having to write all this themselves all the time. And then it gets submitted via your accountant through to the Inland Revenue, to HMRC. And the lovely bit then is that typically 4 to 8 weeks later, you receive money back. It has, that particular figure, the 4 to 8 weeks, does change. Currently, we are seeing some clients getting it back in as little as week to 2 weeks. We have seen, however, in times gone by prior to COVID, at one point, they were running at about a 3-month turnaround time with the HMRC. So it does go up and down, but at the moment, a huge credit to HMRC, who probably are, like lots of people, struggling for staff, struggling for time, but they are pushing these through very, very quickly. I think they understand that right now, for a lot of businesses, getting extra cash into business is absolutely crucial, and they are supporting that. So I would say thumbs up to Inland Revenue for that one. And this time of year is another example where they do work hard. I think this is a time where clients at the end of the calendar year do often look at this kind of thing and think, my goodness, what can we do to help ourselves? And an R&D tax claim is a great example of something that can be hugely beneficial. Okay, I'll just mention coronavirus then. I think, again, it's something that people would be interested in. For the vast majority of government funding, that won't affect any R&D tax claim. If you've had a bounce back loan or a civils or whatever, that won't affect it. So there would be almost certainly no issues with that. Having said that, if you have had a specific grant for any R&D activity, then clearly that particular element of the work would be ineligible. So that's the only, and it's quite rare that people have got something specifically for an R&D project. I just mentioned furlough as well. Clearly, legally, when staff are on furlough, they're not allowed to work. So any staff cost during the furlough period would be ineligible because people wouldn't be working. And much of a claim, an R&D tax claim, comes from the staff cost. So whilst I don't think it'll be necessarily relevant to retrospective claims that we're starting now, as we start to do the claims this year, then the furlough will become more relevant to the sums. And just I mentioned for Lydbury, like I'm sure most firms, we've now adapted our process certainly so that we can work remotely. We can come and see clients if they prefer, but equally we can work totally remotely. So there's no requirement. We can social distance in whatever form a client would want that. Right, that was a quick canter through. I hope that's made sense to a lot of people. I know we're going to have some questions now. Thank you, Ian. But if anyone wants to contact me by email or mobile, that's fine as well.
No, thanks very much. It's great to hear that presentation, Andy, and great job. I expect that from you. You're a seasoned professional in the area. Obviously, you've been doing this a fair time, haven't you?
Yeah, a few years. Yeah.
Bears the scars.
Yeah, no, it's good. It's good. Actually, it's a great industry. I mean, it's nice to help people. It really is. It's fantastic. Some of the sums you can get back from companies are tremendous, and it's actually a really nice. It's a really nice industry to be in, to be honest with you, because it does. I'm sure lots of us like helping people, and it's an enormous financial help to many companies. So no, I really enjoy it.
So as a strategy, this particular series of WG Hub Live is all about strategies to cope with the current environment and getting out of it. And I guess a claim, getting that extra cash in now. We ought to talk about the way we get refunds, but maybe we'll talk to Charlie about that in a minute. But I think it's quite a useful tool at the moment, even in the difficult situation.
Yeah, I mean it's fantastic for some firms, isn't it? We're just a Dorset-based firm I've been working with. Originally, their first claim was £180,000. They've just put in a claim now for in excess of £130,000. So for them, this is an enormous shot in the arm during these difficult times. Huge.
Yeah. No, absolutely. Phil, I know you joined us there. So your role with Andy, do you want to just sort of describe that a bit?
Well, I guess, Andy and I do the same thing. I've been doing it a bit longer, but to be honest with you, I think once you get sort of 4 or 5 claims under your belt, then it's a case of diminishing returns in terms of experience. But so I've been doing it a bit longer, but we do the same thing. We just do it in sort of different areas. So I'm Midlands based. I tend to take that middle part of the country. Andy's down on the south coast. We've got people up in the north as well, northern England, and even somebody in the sort of Glasgow, Edinburgh belt. So we do cover all regions, and our fundamental job is to, we have a machine, a marketing machine, as all businesses tend to do, and we turn the handle, go off and see the clients, and run them through the process that Andy's just talked about, and hey presto, at the end of the day, hopefully get some successful claims, which currently at the moment is really important to our clients. And really just picking up a point that Andy mentioned there, and yourself actually, Ian, about the situation at the moment is we haven't been busier really, I guess, than we have over the last few months. And a lot of that is logical. It's due to the concerns that most business owners have at the moment in terms of cash flow. I mean, cash flow is always a worry for a small business, well, for any business really. But it's been particularly so because of the situation with COVID. And the interesting thing that I found is that talking to sort of various clients as we came off the back of COVID, so summertime, is that most of them were fairly relaxed about the situation because the government was largely paying most of the salary costs through the furlough scheme. There were some good grants available and so on. So people were fairly relaxed about it. But as we started to move into the autumn, what we found is that people became worried about the end of furlough. Fortunately, that's been extended again. We all know probably that it's extended until the back end of this year, early next year. But what I do see is that people will start to get anxious again quite soon. And so what we found is that there's a number of companies we talk to every year who say, well, that's great. It's good to hear that I'm eligible and I will come back to it, but not right now, too busy. Well, those kind of companies are now coming back to us and saying, look, about that conversation we had last year, it's now very relevant to me. So can we crack on with this?
Yeah, thanks very much. And obviously you talk about clients as in recurring, because this just isn't a one-off, is it?
No, it's absolutely not. And I think that's one of the great benefits of the scheme. I mean, so long as a company generally does what it's always done to be eligible in the first place, then it can carry on submitting claims. And Andy and I have clients who, we're on sort of several years worth of claims. And that works all way round because we have the continuity, we have the knowledge and understanding of the business, and we see how it changes and adapts. And it just makes the whole process more efficient. And it also tends to maximize the value of a claim simply because we know the company more intimately. But yes, I mean, some of my clients have been claiming for 6 or 7 years. I just think it's a really great, I think it's a great mechanism for them to realize that so long as they keep doing that kind of stuff, they can anticipate either a very significantly reduced tax bill or every year some combination of reduction of the tax they've got to pay, plus even potentially some cash back, as Andy mentioned earlier.
Yeah. So Charlie, bring you in, Charlie. What are you generally seeing out there in terms of tax credits, and have you got any view on the advance assurance?
Well, actually, I was going to ask a similar question to Andy about whether he felt that there was a benefit of the advance assurance mechanism. Obviously, if you go through that process, then generally your first 3 years of claims will be accepted as long as they are in line with what HMRC are expecting. But I was going to ask Andy whether he felt that was a worthwhile process, or whether he felt that actually it's a similar amount of work to doing the claims anyway. So just, is it more of a let's just put the claim in and see? Is that a better way of doing it?
Yes, that would be my view in almost all circumstances. Advance assurance hasn't had a great take up, I think, for exactly that reason, is that it's a great idea. And I think for some companies, it may give them some contentment, the fact that, they know they're going to be accepted. But I think the reality is that it's almost the same work anyway. And it's better just to do it at the start. That's what I generally advise, is just do it at the start. We'll get it in, we'll get it moving. And then you don't have to worry about in 3 years' time, would there be any problems? So I generally don't recommend advance assurance for that reason, although it's a perfectly fine scheme.
Yeah, I think it's kind of like almost like an emergency measure, really, and I think it becomes very valid in the current situation. One of the concerns that I have about the advance assurance scheme is essentially it's a bit of a wet finger in the air in terms of how much a company should get. There's very little analysis and relatively little process behind it, so it tends to be, what's your best guess? If that's all well and good, I mean, I don't think people would purposefully take advantage of that and try and sort of gain more from the system than the system would otherwise deliver. But it does mean that there's the potential for some retrospective action, sort of downstream, perhaps on a second claim or subsequent claim. There needs to be some adjustment made just to understand actually, that the first claim perhaps was significantly under costed or significantly over costed. And that's where I have some concerns about it.
Okay.
Sounds like we're on the same page on that then, because I had the same feeling that the amount of work that went into it, you might as well just be doing the claims.
Yeah, exactly.
Yeah, that's good. So, Charlie, in terms of the number of claims, are you seeing an increase, or do you think there's just a lot of people that just don't know enough about it?
I think that is the case, and actually we have clients where, because we're not scientists or experts in technology, we can talk about the tax side, but we quite often look at a client and think, well, are you sure you're not doing something that's R&D? A bit like Andy said. And then generally we sort of send them off to someone like Andy and say, look, speak to these guys, because we can tell you what the reliefs are, but in terms of whether your project or the work that you're doing is going to qualify, these guys are the experts, and they're going to be the ones that will write you that detailed report that will get you the claim back. I think Phil's point that at the moment, I think more people will be looking at this. I mean, we're telling a lot of clients at the moment that cash flow is king. In terms of keeping a business afloat, cash really is one of the most important factors, and I'm sure you're saying the same thing. Yeah. So any way of boosting cash, especially when HMRC are giving out cash, which, let's face it, doesn't happen in many situations, side, which is obviously a bit of a strange one this year. But I think there's going to be more of an uptake, and we will certainly be pointing out to clients that maybe they should be revisiting this again.
Yeah. I mean, we certainly anticipate that the next couple of years are going to be difficult for everybody. There's going to be a lot of recovery, a lot of adjustment based on what's happened this year. And cash is always king, but particularly so over the next couple of years. And I think we anticipate just being very busy. Nice problem to have, but nonetheless, I think that is the dynamic that we face.
I mean, we've got an event on Brexit next week. We've got a question in from one of the viewers, actually. What do you think the effect of Brexit's going to be on R&D?
I don't think it's going to change it greatly, to be honest with you. I really feel that the scheme is so successful. There's been no noise about, I mean, there has been talk about it, but at the moment, there's no suggestion there's going to be any material change to the scheme. So I don't think people need to worry necessarily at the moment about Brexit having a dramatic effect on the scheme. There's been lots of talk about it. There has been papers out about it, but at the moment we don't see any change happening to that.
Yeah, and it's still early days, but I think logically the government understands that as our ship sails off into the distance, as we cut ties, certainly in trading terms with the EU, doesn't look like we're going to get a deal. You never know. Sort of, there is a last minute a potential there, but essentially as we move forward alone, and we can open up the relationships with other parts of the world that previously we've been restricted in trading with, then the government wants to see us put our best foot forward, and part of that has to be an innovative nation and full of innovative companies doing innovative things, so we can take advantage of some of these new trading opportunities. And therefore, I think whilst we've not had anything in sort of black and white, we've not had any edicts passed down to us from any kind of government organization, but I do suspect that the government are going to be very keen just to maintain the scheme. And what we do know, I think it was last year that the government said it was going to pump another 2 billion, or is it 20 billion? There's a bit of a difference there, actually. I should remember the number, but a very large amount of money.
Yeah,
okay, it's just one of those other numbers.
Yeah, exactly. What was it, Andy? Can you remember? Was it 2 billion or 20 billion?
I think it was 2.
Quick,
2,
somebody
right?
Google.
Yeah, exactly. It's out there. But anyway, I mean, the government simply said they're going to commit another, let's say it's 2 billion to the scheme between now and 2025. So that just shows a long-term commitment to the scheme, and that was said at the time where Brexit was still very much happening. So I think generally it's going to be positive with the scheme. I think it has to be, because how can we cut support to innovation at a time where we do actually have to start trading independently, so to speak, as a nation?
Yeah, so what we're talking about here, I mean, I've had a question on, just from one of the viewers there about the government spending review, and the impact there. I mean, the thing is that a lot of this R&D, like you said, people see the vaccines, you've got to do a vaccine or something like that, then you're a scientist,
Yeah.
But what we're talking about is the broader view here, which we can talk about in a minute. But the fact is, there are so many more businesses that are going to be involved in infrastructure projects that they're talking about and getting the economy moving. So do you think there's just going to be an increase in the number of those businesses, maybe startups?
Oh, I definitely hope so. Yeah, I mean, I would be disappointed if, in the situation now with, industry picking up after this, if this isn't one of the areas they look at, because as I say, the scheme is so wide in its eligibility. It would be disappointing if more companies who are either in trouble or want to expand post coronavirus don't look at this scheme. So, yeah, it's I always ask folk to just look at it. Really do look at it. Make sure, speak to an expert. Make sure there's nothing you're doing you can't claim for. So I'd be very sad if firms who are potentially eligible don't use this as an opportunity to look again at the scheme, because it's such a great scheme.
Yeah,
well, we had a question after last week, actually, following the additional help, the job retention scheme, that sort of thing, about the impact of taking that, what is termed state aid, and the impact of that on R&D. But I understand that the particular sort of COVID-related support isn't affecting it unless perhaps the CBILS is directly funding a project. Am I right there?
Yes, absolutely. Yeah, I think unless you have had something that's specifically for R&D, it's unlikely anything else you've got will affect an R&D tax claim. We'd have to look at individually, but as a general premise, unless you have had something that has actually been delivered for the purposes of doing something R&D related, you wouldn't need to worry about it as a rule.
Yeah, and that's not new, actually. It's not even a kind of COVID related issue. It's always been the case that if a company or a claimant has received some form of state aid, declared or notified state aid, then we have to have a look at that and understand whether it's applicable. And let's say, for example, I don't know, a claimant had a particularly large development project which it went off and got some funds for, choose a number, £50,000. And it turned out out that the actual cost of that of the activity of the project was £100,000, then we simply would just deduct the 50,000 from the 100, and we'd work with what was left. However, we only have to do that in a situation where the 50,000 was specifically allocated to that particular named project. So it would be all over the paperwork. We want 50,000 for this particular work. Very interesting. Tell us about that work. So there's description, and it became very obvious that there was a direct link. But in a case where state aid, even pre-COVID, was just general business support, then it wouldn't affect an R&D claim, because it wouldn't be specifically declared to be related to that particular bit of R&D work or R&D project. And of course, that ruling carries forward now to the various kinds of COVID-related support. None of it, I can't imagine any of it, would ever be specifically declared for the development of a widget, and therefore we don't have to worry about it too much.
Yeah. Well, no, it's very interesting what you just said about their specific projects. I got very involved in R&D early on, sort of, when it first started, because we've had many a chat, haven't we, Andy, about my father's role as a boffin in the military. But the fact is, he was very much obviously sometimes he wore a white coat, but not very often. It was more about crawling over pieces of military equipment in the middle of nowhere. But I think the fact is that when talking to him about how it came sort of from the military into, if you like, into the sort of private sector, we were then looking at very, very sort of specific projects, and it's how you sort of wrap that project. And I think this is where you come in, isn't it, guys? Really, sort of about how you, and then that gets presented on to somebody like Charlie to sort of send to HMRC. So I just thought perhaps you'd like to talk about how you sort of package that for HMRC to understand.
So most of the work, all the work will be put into project base. So they refer to projects, as you say there, Ian. So when we create the technical report, we put it into individual projects. The entirety of the R&D work can be put into a number of projects, or we can add in the end. There are lots of, some clients will only have 2 or 3 projects. So that's relatively simple, relatively easy. But for other people, they have lots and lots and lots of projects. So we will typically write up the 3 most important ones, and that's the largest amount of R&D they do. But we will certainly box up all their major work into project-related activity. And again, people might suddenly think, "Oh, hang on, I'm not doing any projects," but that's just HMRC's terminology for how they want to see it presented to them. So, as I say, that's part of the work we do. We go and speak to the client. We look at the totality of their R&D, and then we help them put it into a project sort of terminology, and we box it into elements that will work for them. And then, as I say, that's easy then for HMRC. When they look at it, they're looking for the advance, and that's how we produce the advance, which is basically the nub of the acceptability for them.
Yeah.
I was just going to say, I mean, sometimes it's a really interesting process, and it's kind of like walking across a farmer's field with a metal detector, and you have to have the metal detector to find the buried metal. And so when you're talking to a client, if we start talking about, I mean, Andy just hit the nail on the head. I mean, HMRC talks about projects, but clients don't think about projects. They think about work or jobs. So, I mean, Andy had it in his presentation there. It's a very sophisticated technical term that we used. It is the metal detector. And we say to them, "Did you come across anything technically tricky?" That's all you say to them. And they go, "Oh, yeah, actually, yeah." And as soon as they think about that technically tricky thing, however it was, wherever it was, then we're talking about R&D. And that's the project. And suddenly they think, "Oh, right, okay." So it doesn't matter that actually we were 6 months into doing a job or a piece of work, and suddenly it got technically tricky. The point that it got technically tricky is the start of the R&D project, and you can work it forward from there. So it's almost like a litmus test. Was there anything technically tricky about it? And the light comes on, and you have the conversation, and it's great. It really is good.
Yeah, I love talking about tricksiness. There's a lot of that around at the moment, isn't there, really? So when we were taking that technical tricksiness, Charlie, and you get these reports about these different, what do you do with them?
Well, obviously,
the viewers would just love to know what happens when you get a report.
We're obviously the ones that submit that claim to HMRC usually. the first conversation to have with the client is what type of relief they're actually going to get back for this. So as Andy mentioned, it kind of comes in two forms. It's either a reduction in your tax payable or it's physical cash paid by HMRC. So if you're a profit-making company, then that large deduction for R&D is going to come off your profits before they're charged corporation tax. So you're seeing immediate relief at the rate of corporation tax, which is currently 19.5%. But if you're a loss-making company, you've got a choice. You could be carrying that loss forward, again, to be getting relief against future profits at the applicable rate of corporation tax, or you can surrender that loss, and that's where the cash comes in. So you can surrender your loss and will get 14.5% of that loss back as cash from HMRC, which, as we said earlier, quite rare to get cash back. It's a bit of a discussion to have with the client about whether they want to get the slightly higher amount of relief by carrying it forward against corporation tax in the future. We obviously don't know what's going to happen with corporation tax.
Yeah.
It's at a pretty low rate at the moment. Government are looking to ways to increase the tax collection. Not sure if we're going to see an increase in corporation tax. So those losses may be worth more in the future. But if you surrender them now, although you get the lower amount of 14.5% back, that is cash in your pocket.
Yeah,
very much, yeah. But it's very much a conversation to have with the client about what are they expecting to happen. Are they expecting profits next year? Do they really need the cash now to reinvest in more R&D work? So that's the conversation that we usually have with the clients. The other thing to bear in mind, if you're going to surrender for the tax credit, if you do owe other amounts to HMRC, so PAYE, VAT, other corporation tax, they will offset those amounts against the tax credit. So if you're expecting a nice, 30,000 check, but you already owe HMRC 20 grand, they will be taking that, in most cases, taking that off and paying you the difference.
Does that apply at the moment with the deferrals?
Well, that's an interesting point, because I haven't actually come across anyone in that particular situation. I would guess that if you've got a time to pay arrangement, you're probably then in that time to pay arrangement, and potentially they won't try and offset because you've already come up with an agreement with HMRC of how you're going to pay that. I would suspect in other circumstances, if you just haven't paid HMRC and you haven't spoken to them, they might still be trying to collect.
Right.
I'm not sure if anyone else has had that yet, because I haven't actually had anyone with a tax credit and owing tax in the COVID situation. So
yeah, we haven't seen that yet either. I think we will start to see that, but as yet it hasn't happened. Certainly not that I'm aware of. But I think you hit the nail on the head. I think if you're in some kind of TTP, a time to pay arrangement with the revenue, then that's the agreement, and that's what they're going to stick to. And what happens with the claim after that is secondary to that particular arrangement that's in place.
Yeah. Again, it's the time to have the conversation with the client, because if they've got, hopefully as accountants, we'd already know if they've got tax bills that they haven't paid. But if they haven't, the advice would be to get them into some sort of time to pay before that R&D claim went in, just so that we can try and ensure they get as much cash back as possible.
Yeah. I mean, it's also very difficult for us, us guys. Obviously, we're embedded in this particular thing. We've got we have a vested interest as advisors actually to get the point across, but it's not actually always that easy to get a client to get moving. So do we need to talk time limits here to get people, to move in?
Yeah. Oh yeah, absolutely. I absolutely agree with that. So I think I mentioned during the presentation, and I noticed there's a question down there about backdating claims. There are a couple of great times to get it moving in terms of trying to cajole folk into doing something that they really should be doing anyway. So clearly the first one is the time limit in terms of their previous financial years. So they can only claim retrospectively for 2 years. So they will have a time limit after that. So they need to make sure that they are not losing the benefit of years that have ticked by. So effectively, they can go back 2 years plus almost, 8, 9, 10 months, whatever it may be, depending on how far through they are current financial year. I think the other great time for people to think about it, and for us to try and just say to them it's a great time to do it, is they've got 9 months clearly after their financial year. So that 9 months is another good time for us to be saying, look, it's a great time to do a claim, because then you can offset any tax you are due. So I guess they're probably the other. And I guess really from a calendar year as well. Actually, sometimes towards the end of the year, people do suddenly think, oh, it's a good time to get things sorted out, clear the decks before Christmas, before the new year. Obviously, coronavirus aside, that's changed things for a lot of people. But there are 2 or 3 key things that can cajole people into doing something that, we all have things that we put off because we don't do it for whatever reason. But those are probably the key.
Well, I've therefore got an alternative plan for people. Charlie put a lovely post on LinkedIn saying how many people did their personal tax returns on Christmas Day last year. How many was it, Charlie? You said something like 3,000 or something?
Something ridiculous.
It was a lot anyway.
I expect it'll be more this year if people aren't really allowed to go and do so much for Christmas. So we'll probably see that number double. But
well, there we go. So you've got a personal tax return on Christmas Day, R&D tax claim Boxing Day.
Perfect. Yeah.
What a plan. So in terms of those time limits, Charlie, so what are we effectively saying? So we've got to just say we have, a lot of 31st of March year ends being sort of completed now. I mean, even with Corona, obviously there's been a lot of trouble with accountancy in general, just trying to keep up with the time limits. We had a bit of fortunate in that Companies House extended everybody's filing limits, but that's not really affecting corporate tax, is it?
It's not. So corporate tax still has to be filed within 12 months of your year end. But for these claims, you've got 2 years. So generally, you've got another year window to amend your corporation tax returns. And so the filing of these claims sort of fits into with that same window. So if we're looking at, say, a March 20 year end, then yes, you have got until March 22 really to make that claim. But I'm sure people like Andy would prefer you not to be getting in touch with them in March 22 to start that work, because they do need to go and do their investigation, talk to you about the projects, get their report drafted. So really, once that year end's passed, you should be having that conversation. And actually, possibly even before that, because while you're in the midst of a project, I mean, I know clients don't tend to think of it like that, but while you're really in the midst of it, could be the best time to speak to Andy or Phil, because you're going to really remember all of that work that you did and what were those problems that you encountered, how did you resolve them. Whereas 2 years later, I'm sure people will remember, but I think the detail will probably be a bit hazier.
Yeah, so we could in technical terms, March 19, we've still got a bit of time to do something.
Got a bit of time, but I'd be speaking to people soon so that you can get all of that technical work and the report drafted, ready to put those claims in.
Okay, so we've got to make sure those people do the R&D on the 20th, 21st, so that Andy and Phil can do the returns
maybe that's better. Yeah,
Boxing Day. Is that where we're at? Yeah. Right.
Maybe that's a better solution. But so while it's fresher in clients' minds, it's probably the best time to be having those conversations.
Yeah. It is a much easier journey with the client if they are actually still working through it, or it's familiar to them, all the receipts they might need or whatever. It's all there to hand, so it's much easier for them. It just helps everybody really if they can do that. I appreciate some can't, but as a rule, it's a much simpler journey for them.
Yeah. Okay.
Once the client's sort of aware of the costs that they're allowed to claim as part of their R&D, they're probably going to be a little bit better at keeping those records going forward. So obviously all businesses are going to have decent bookkeeping records, but in terms of segregating the costs that are specific for R&D, if those clients know what those are fairly early on, they're going to be able to keep those records much better, again, rather than later on trying to say, oh, hang on, did Joe Blogg spend 40% of their time on this, or was it something different? If you're keeping those records as you go, it's going to make a much neater claim.
Yeah.
Also help clients as well, in so much as if they know some of the activity they're doing is going to be eligible. I think it can sometimes vary how they approach the project as well, as opposed to spending money that isn't eligible, that might be eligible. So I think they always feel a lot happier knowing that what they're doing is going to be eligible, and not only that, but they've got the records to hand. And then when we talk to them later, it's a relatively simple process to push it all through.
Yeah. So John, real-time accounting has got a role here.
Yeah, I suppose it has, and obviously highlights the fact that clients need to maintain their organisation as much as possible, actual organisational skills, ensure they've got the right resources in place to make sure that they can reel off the information as quickly as possible. Because in the end, it's in their best interest to keep cash flow moving efficiently, to get the R&D money in as quickly as possible, to aid them in whatever endeavours they've got coming in the future.
Yeah,
and stay competitive.
Well, that's it, isn't it? At the end of the day, we haven't really talked about it. It is, well, you mentioned it earlier, actually, that there is a competitive advantage here, effectively, for those who claim.
Oh, hugely. So, if company X are claiming and have got this money back and company Y are not, then they are clearly at a disadvantage, which is another area where I think, it's a shame that so many companies don't, at least ask the question and look into it, because, who wants to be at a disadvantage every morning when you walk through the door? That it seems unfair, but it's not really unfair. It's just the fact that one company has been able to pick up the phone or to send an email and is now looking into doing and has successfully claimed. So if you imagine those firms that I showed in the presentation there, the kind of money some of those are getting every year against their competitors who aren't, then it does seem, as I say, it seems a shame that particularly the other companies would be just as eligible in many respects. I suspect it does make it a bit more difficult, I think, to remain competitive.
We can kind of put some sort of metrics around the importance of that, because if we think about what actually an R&D tax credit is, and an R&D tax relief is just a reduction in tax that's due to be paid. So you don't physically get the cash, but you don't pay out the cash. So actually it doesn't matter whether it's a tax credit, which is cash back or tax relief. That the issue is that financial benefit directly impacts the bottom line. And when we think about companies who are going to invest in staff or equipment or whatever it might be to try and drive their business forward, it could even be a new marketing partner or new marketing campaigns, but whatever, it's cost or expenditure that they're going to make that is above and beyond their normal sort of run-of-the-mill sort of day-to-day expenditure. When we think about that, it has to come from profit. And what we find as a general dynamic, it's not true in every case, but largely is true, is that for your average claimant, which we find is a company in the order of about 20 to 30 people, that kind of size, with turnover in the order of about £1 million, £1.5 million pounds, that's pretty much your average SME. But that kind of company, the average R&D claim actually doubles the profit that sits on the bottom line. It's as though they'd literally gone out and sold as much of the stuff that they've sold in a year, or all that amount again. And therefore, when it's time to think about how shall we invest our profit to drive the business forward, they've got double the profit to invest effectively because of the R&D claim. So the R&D claim is that powerful in terms of giving companies a competitive edge. So,
Charlie, in terms of the actual amount, because we're talking about 230%. Is that?
Yeah.
This is the number, isn't it?
Yeah, exactly. So if you've spent 100,000 on qualifying R&D expenditure, then the number that's going to get deducted from your profit will be 230,000. So it's a big uplift in deductibility for corporation tax. The types of things that count are staff costs that are directly attributable to R&D, so salaries, employers' national insurance, pensions. If there's any software that's specifically relating to your R&D, consumable items that are being used either to make prototypes or for water, gas, power, that's going towards that kind of thing. Some subcontracted costs will count as well towards your R&D claim. So there's quite a list of expenditure that you can sort of tease out, and if you really look at it, go, no, actually, this cost was to do with this.
Yeah. There's always a bit of a confusion about third-party costs, isn't there? I mean, I know we've got a question here. Do third-party app development costs count towards R&D?
Phil, do you want to grab that one? I know you've had a firm do exactly this, haven't you?
Yeah, exactly. The simple answer would be yes, but we have to look at the detail of it. And quite a lot of development actually goes on abroad, and people say, is that eligible too? Well, it is. So long it's the UK company, the claimant, that is paying some bill of a development team abroad, then it becomes eligible. And the rules are really, they get very complicated when it comes to essentially third-party organizations. And there's aspects, for example, if a third-party organization has some shares in the claimant's business, then that's called a connected third party. We have to be very careful how we treat that. In terms of individuals, there's some people who work like a subcontractor, so we say to them, please do a job and tell us how much, and they do. But there's other people who work a bit more like temps, so we call them EPWs, externally provided workers. There's lots and lots of rules and regulations around this, and to be honest with you, this issue of what third party cost can we include is the area that I find most commonly needs the most amount of work to get it absolutely right. And I suppose in subsequent situations where unfortunately an inquiry might happen, it's that particular area that tends to be the problem. So to be very careful with it. But in principle, yes, if an app is developed by a third party organization, be that UK based or abroad, then in principle it is eligible, but we just have to look at the detail behind it. I guess the one other thing to say about that is that the cost of the eligible cost related to the development of something by an external party, unfortunately, we don't get the full value of that in the way that we would do if it was internal staff or PAE-wise staff that are doing the work. So again, we just have to look at it very carefully. But in principle, yes.
All right, that's great. So have you got any other points you'd like to add, Charlie? To any of the discussion so far?
I think the key thing is for clients and for accountants to clients is to remind them that this relief is available, and especially at the moment that, you know, that tax relief or tax credit could really make a huge difference to their business. So time for everyone to relook at what either their clients are doing or what their own business is doing to see if there's anything that might well qualify.
Okay. Thank you, Charlie. Thanks for joining us, Charlie. We really appreciate your input today.
Thank you. Great to be here.
You have very, very many happy claims in the future. And to Andy and Phil, thank you very much for joining us today.
Pleasure.
Presenting. Much appreciated.
Yeah,
and thanks for Jono. You can go back to warming your hands on the fire now.
Lovely. Thank you very much. Toast some marshmallows.
That's it. Okay. Well, thanks ever so much, guys, and hopefully see you all again soon.
Thanks, Ian.
Thanks again.
See you guys.
Bye.
Have a good weekend.
Bye.
So next week on WG Hub Live, we attempt to address the B word. Well, I guess B did come before C. As a COVID, but yeah. So we really need to go back in time, revisit what's happened with Brexit, what's coming, look forward to the next big issue that's breaking over the new year. What strategy we can put in place. So how can we understand the rules? How can we apply ourselves to the challenge ahead, basically? So joining us next week will be Tamara Haberley from the VAT people, who will share their insights on VAT and duties. So look forward to seeing you same place, same time, next Friday, 10 o'clock. And thanks very much for joining us.